look at the numbers of Synergy Income Fund with company CEO William Brooks. William, thank you so much for making the time to join us. Maybe before we get into your numbers, let's just get some clarity between your A-linked units and your B-linked units. What is the difference and which of the two is more profitable for the investor?
Good morning, Nazipa, and thank you very much for having me on your show. As you mentioned, we've got a dual-linked unit structure, so we've got A-linked units that have a preferential entitlement to distributions, and those distributions increase by 5% every year for the first 5 years, and then the lower of 5% in CPI thereafter. The remainder of the distributions accrue to the B unit holders. So the B unit holders benefit from the dual leverage provided by the A unit structure as well as the bank debt within the company.
William, it's Tumisho here. Just looking at your results, we saw strong performance, and it was really underpinned by some of your high growth retail portfolio. But you are targeting the lower LSM market there. The fact that we are in an interest rate increasing cycle and we're seeing the consumer under pressure, is that not at all an area of concern for you?
Yes, it is. We are a pure retail fund, so we only invest in retail assets. We have 15 shopping centres valued at just over 2.4 billion rand, and over 70% of our net operating revenue within the portfolio is accountable to the top 7 centres within the portfolio, all of which are targeting the lower LSM mass market retail sector of the South African market, which is the growth opportunity going forward. So we're very mindful of the very challenging operating environment we're in at the moment, but also positioned well for the growth demographic in the country. So yeah, that's the position of the portfolio.
William, no doubt, just as a follow-up to Tumish's question, that you're constantly asked why no diversification to protect yourself to some extent if there is a significant downturn in the retail sector. What's your usual comeback to that?
When we set up Synergy several years ago, we took a very clear view that we wanted to differentiate ourselves within the listed property sector, and focusing on retail, and specifically retail targeting the growth demographic in South Africa, we felt was the right investment strategy, and we remain firmly of the view that that is the area of the market to be in right now, and we will continue to invest in that market going forward.
William, I do have to ask you this. I mean, you started with just 3 shops right in the beginning, and you do say that the South African demographic is very important, but we are seeing a lot of the South African companies moving outside of its borders. Is this perhaps not an option for you, perhaps maybe in the medium to longer term?
It's certainly an option for us in the medium to long term, but right now we're only 3 years old as a listed property fund. We're still very small in terms of a relative size to other counters in the sector. So our focus is squarely on building the portfolio within the South African market at this stage. We're not looking beyond that at this point, but in the future, certainly that will be something that we will consider.
William, quite solid numbers with your distributional income going up by 9%, but maybe let's turn our focus to the future and what sort of targets you're chasing. Should we be having the same conversation this time next year?
We've set out a conservative forecast indicating that we expect growth on the B units to come down to around listed property sector averages of around 6% growth. We're doing that because we're very mindful of the environment that we're facing, characterized by rising interest rates and a pressurized macroeconomic environment. So our forecasts are for lower growth on the B unit distributions going forward. The A unit distributions will remain in the contractual 5% levels.